Most people think buying a home in Delaware means you need perfect credit and a big down payment. That's not true. In fact, depending on your situation, you may be able to buy with little to no money down, even if your credit isn't perfect or qualifying using income that's not showing up on your tax returns. In this video, I'm going to walk you through exactly how that works and help you figure out which mortgage option might be the best fit for you. Hello, my name is John Thomas. I'm a branch manager and senior loan officer with Primary Residential Mortgage, and I'm also the author of Your Guide to Buying Your First Home in Delaware. And I've helped thousands of buyers here in Delaware and Maryland navigate this process. What I want to do today is simplify everything for you, because the biggest mistake I see home buyers make is trying to figure this out on their own without understanding all the options available. So let's start with the big picture. There isn't just one type of mortgage. There are multiple programs, and each one's designed for a different type of borrower. The right loan for you depends on three main things. First is your credit score. Second would be your income structure. And third would be how much you want to bring to closing. Once you understand these three things, everything else starts to make sense. So let's start with first-time home buyers and low down payment options. So the most common scenario is first-time home buyers. If you're buying your first home in Delaware, you typically fall into one of a few categories. FHA loans are one of the most common options. These allow for a low down payment and much more flexible credit guidelines and debt to income ratios. If your credit score is 580 or higher, you qualify for as little as 3.5% down payment. If it's lower, there are still options. You can go down to 500 with 10% down. Then you have conventional loans, which can go as low as 3% down for qualified borrowers and often have lower long-term costs if your credit is strong. One of the biggest opportunities here in Delaware is the DSHA, the Delaware State Housing Authority programs. These can provide down payment assistance and below market interest rates, sometimes covering a large portion of what you need to bring to closing. No money down options. Now, if your goal is to buy with as little out of pocket as possible, there's two major programs we can look at for you. The first one being VA loans, which are one of the strongest loan products available. So if you're a veteran, active duty military, or surviving spouse, you may qualify for zero down payment and no mortgage insurance. For you non-veterans, USDA loans are another option for eligible properties in certain areas, offering 100% financing as well. These programs can dramatically reduce your upfront cost of buying a home. What if your credit isn't perfect? A lot of buyers think they need perfect credit score to get approved for a mortgage, and that's not how it works. There are programs designed specifically with buyers who are still building or rebuilding their credit. FHA is often the starting point here because of its flexibility. But what matters more than just your score is the overall picture, your payment history, your current debt levels, and how everything comes together on your credit report. Self-employed and non-QM options. Now let's talk about one of the biggest misconceptions. If you're self-employed or you write off a lot of income, that doesn't mean you can't qualify for a mortgage. It just means you may need a different type of loan. Non-QM loans allow you to qualify using alternate income, such as bank statements, 1099 income, rental income, or even your assets. These are especially useful for business owners, investors, and anyone whose tax returns don't reflect their true income. Investors and DSCR loans. If you're buying investment property, there are also options designed specifically for this scenario. DSCR loans allow you to qualify based on the income the property generates rather than your personal income. No tax returns, no W-2. That changes the game for a lot of investors. Instead of focusing on your job or your tax returns, we're looking at whether the property itself makes sense financially. Renovation and construction. Now, if you've ever looked at a home and thought this would be perfect if we could just fix it up, you're not alone. Renovation loans allow you to purchase that home and finance the improvements at the same time in one loan. Programs like the FHA 203K and conventional renovation loans let you roll those costs into one loan. And if you're thinking about building from the ground up, there are one-time close construction loans. That means you can build your dream home and finance it with one loan in one closing instead of going through multiple steps and with low down payment. How much do you actually need to buy a home? Another big question is how much money you need to buy. The answer is it depends. Some buyers come in with minimal out-of-pocket costs, especially when combining low down payment mortgage options with assistance and first-time homebuyer programs. Others may choose to put more down to reduce their monthly payment. But the key is understanding your options before you assume what's required. Why most people get this wrong. The biggest mistake I see is people trying to fit themselves into one loan program instead of looking at all the options and choosing the best strategy. You don't need to figure this out on your own. What matters is putting together the right plan based on your current situation. If you're thinking about buying a home, refinancing, building, or investing, the next step is simple. Call me, John Thomas, directly at 302-703-0727, and I'll walk you through your situation together. Or if you're ready to take the next step, you can simply apply online at PRMILoanApplication.com. Either way, we'll make sure you understand your options and put you in the best position possible before you move forward towards home ownership or buying that next property.